What jumps out for you?
Honestly, it sounds like more of the same.
Yeah.
I know that's not very newsy, but that's what I'm reading, at least so far. But, Tim's faster than me, so maybe he's seen something different on page 5 by now.
Well, I go to page 2 and I go to prices because I'm interested in what these districts are reporting when it comes to inflation. Prices increased moderately in recent weeks, with 8 districts reporting moderate price growth and 4 seeing slight or modest increases. Many districts reported that costs rose across several non-labor inputs, including insurance, utilities, and energy, metals, and other raw materials. An issue for inflation, or is that to be expected?
I mean, I think that the worrisome sign about that is that, remember, this all happened before the war in Iran started over the weekend. So those are really things that you might start to think about, particularly on the energy side, as far as what might be a risk for the inflation outlook here domestically. Should this be a more prolonged conflict? If we really start to see a sustained energy shock in oil and gas markets. Too soon to say that just yet. And of course, if this starts to impact other parts of the supply chain and logistics, we're just not seeing that yet. But so far, it seems like this is a fairly benign looking beige book. Also on the employment side, stable is what most districts seem to report. And that's exactly what the Fed wants to see. And that really jives with the characterization that Powell and others have been saying, that the labor market appears to be stabilizing. Got that a little bit with ADP this morning, and we'll try to see that with the jobs report on Friday as well, but there might be a little bit of noise with some other factors in that one.
Yeah, I thought it was interesting too. I mean, that they highlighted things about firms continuing to pass tariff-related cost increases through to their customers. Others began to do so after having absorbed previous increases. And we thought we would get to a point in the stage where companies were like, got to move it along, got to move it along. And the other thing I think is interesting is in terms of labor, we saw wages rising at a modest or moderate pace in most districts, firms competing for talent in select areas, including the skilled trade. So, it just, to me, Molly, reminds what I feel like a lot of guests come say, that we're not quite there on inflation, and it feels like the scales are tipped that it could go higher. That's even backing out the war in Iran.
Totally. And I feel like what we've seen in the last couple of producer price indexes, so this is the wholesale inflation level, they've been very firm. You're not seeing that as much on the consumer price side, but PPI tends to lead what consumer prices see. So it's really just a matter of time then, if firms are seeing these increased input costs, that you usually somewhere down the next couple of months, that usually does translate to consumer prices.
Any of this, and we're going to talk about this at 3 o'clock with Steve Moore, a former economic advisor to President Trump. Fed Governor Stephen Miron said it's still appropriate to continue cutting rates.
Wait, he does?
Yeah.
What?
Well,
shocker.
I know.
Sorry.
But it does raise a question if anything that could happen, at least on a macro level, not just in the U.S., but outside of the U.S., with Iran, with prices as increasing because of shipping issues, because of, what happens with energy, if that changes his view or changes anyone on the Fed view who is actually dovish right now.
I mean, I think we've known for a while Myron's an outlier here.
Yeah.
So we'll leave
hence
his...
why Carol was like, really?
Welcome to the show, Captain Obvious.
We will put
Are you talking to me?
I kid.
We'll put his views
Tough
over
crowd.
in one bucket. But for
tough.
everybody else,
Yeah.
definitely much more wary of the inflation risks to the mandate, which is why the stance to keep rates on hold right now really is the pervasive view, and that especially with what we've seen with the labor market recently, there do seem to be signs more validating that stabilization stance. This doesn't call for a job market that needs immediate rescue in any way.
I want to ask you about going to the overall economic activity. And they said activity increased at a slight to moderate pace in 7 of the 12 Federal Reserve districts, while the number of districts reporting flat or declining activity increased from 4 in the prior period to 5 in the current. And they said although consumer spending increased slightly in balance, 2 districts reported ongoing declines. Many noted that sales were dampened by economic uncertainty, increased price sensitivity, and lower income consumers pulling back on spending. And again, not a new narrative, but you do wonder if there's still this feeling of unease. And should we assume this is prior to what happened last weekend in terms of the invasion on Iraq? None of that is included in here.
Yeah, no, this is before the Iran war. So this is
Iran.
Right.
If I said
Yes.
Iraq.
No. Yeah. We're
I remember that one
behind us.
I remember that one too. Sorry, but go ahead.
That's all right. I mean, I think, there have been some economists lately who have raised some doubts about what we call this K-shaped economy.
Yeah.
So that idea that wealthier consumers are propelling all of spending right now and that lower income consumers are really falling behind. I think where their doubt stems from, not so much that the wealthy are continuing to spend, but just how much low income consumers are not spending as much. How much are they pulling back? Mm-hmm. And when you see, granted, all of this is anecdotal data. Mm-hmm. Like, we don't have any hard numbers in this report. This is just what Fed presidents and their districts observe as far as activity in their areas. That still speaks to, though, that this trend is very much still happening. Yeah. And you do see evidence in the hard data that would support the idea that lower income consumers are spending less.
All right, going to leave it there. Listen, thank you so much. We're on to, though, the jobs report. Just real quickly before I let you go, what are we anticipating on Friday?
It's going to be a tough read, I think. The payrolls number, there was significant strike activity in February, as well as winter weather that could make the payrolls figure a little messy. So we're looking at the unemployment rate to keep it clean.